Hi everyone, thank you very much for tuning into the video today. I'm Jarrad Brown, Senior Financial Planner based in Singapore, looking after Australian expats all over the globe. Every now and then we like to welcome experts onto these videos to share some ideas, tips, insights, gotchas of what to watch out for. And today I'm thrilled to be joined by Aaron, crypto tax expert, chartered accountant based here in Perth. One of the, common questions, or some of the common questions we get asked are what on earth do we need to think about when it comes to tax, cryptocurrency, all this talk about NFTs now, naturally a bit of a hot topic. So Aaron and I are going to be having a bit of a Q&A session today, and I really hope you get a lot out of it. So Aaron, I'll throw it to yourself. Perhaps can you just give us a bit of an introduction on who you are,
Sure.
what you do?
As Jarrad said, I'm a chartered accountant, recently a chartered tax advisor only as of last week with the Tax Institute, and finishing a master's at the moment. So, very heavy tax background, but I kind of naturally fell into the cryptocurrency space. I recently spoke at the convention center in Perth at the first crypto forum that was held here, and I recently presented to other accounting firms at CPA's public practice forum regarding crypto and what to look out for. So it's kind of an area that I kind of just naturally fell into, but I also had an interest in it. So it's one of these things that kind of made sense quite quickly, which I know for a lot of people isn't the case because it is quite a complex area. I guess that's a bit of background from where I'm at the moment.
Fantastic. So I guess starting with the basics, for someone who has heard of cryptocurrency, maybe they've heard of Bitcoin, Ethereum, NFTs, whatever else it may be, for someone who's not actually bought any yet, how does someone actually go about taking their cash in the bank and actually putting it into one of these coins?
Yeah, so look, from an Australian perspective, it's super easy. There are a whole suite of exchanges. So similar to when you buy shares, there's CommSec, Self-Wealth, all those types. It's the same for crypto. So a couple of big ones in Australia are SwiftX, CoinSpot, CoinJar. Binance is I think in the US one, but that's also heavily used in Australia. And it's scarily easy to get started. It's excuse me, as simple as opening an app and putting an email address in. So it is super simple. Now that is obviously fraught with danger because it's very easy to get into the wrong things because it's a marketplace essentially. But it's simple as opening up a exchange and start and transferring some Australian or US dollars or whatever into it, and then starting your investing journey.
Okay. Sounds very easy, and I guess that, as you said, it certainly, poses some problems or maybe makes it a little bit too easy for people to create future problems. So when it comes to, ownership, tax structuring, what do people need to think about when it comes to actually buying, trading, or investing in cryptocurrency?
Yeah, so I guess I'll touch on the structuring to start with. Look, a lot of the time people just open it and it's opened in their personal name. And, they might, put some money in there and all of a sudden there's a large tax bill. And then that's when that's unfortunately the point where they come see someone and say, hey, what can I do? And unfortunately, there's nothing you can do because it's in your name. So it's crucial at the start to think about if there's, other alternatives to holding, whether it's a family trust, a company, if you do have a SMSF, if that's something you can consider. And it's important just getting the ownership within the exchange to reflect that. Because if not, it is naturally going to fall back to your personal name. And, large crypto gains aren't uncommon. And, all of a sudden you could realize a lot and you could be stuck with there's bigger problems to have, but you could be stuck with a large tax bill just from how you structure the ownership.
And just for clarity, I know we certainly get asked this question a lot. What is the capital gains tax rate? A simple one, but I think probably important to clarify here. So if I have some cryptocurrency in my own name, I bought some Bitcoin for $10,000, now it's worth $100 and I want to sell it, so I've got a $90,000 gain. If it's just in my own name, what tax rate do I actually end up paying?
So with the capital gains rules, if you've held it for more than 12 months, you automatically get a 50% discount, so you only pay tax on half. But a common misconception is that capital gains has its own tax rate, but it is actually just at your marginal rate. So if you have a salary of $100,000 and you have a $50,000 capital gain, you're probably going to pay around 35%, and then anything above 180 is going to be 47%. So there can be pretty large bills that just kind of creep up during the year, especially when you're doing some trading in, let's say, August, and there's still 11 months to go on the financial year, and a lot of the time most people forget a couple of the big wins they have earlier in the years.
Very good point. So yeah, I guess certainly an important one to think about as you're getting started rather than
Correct,
after the fact. Now, a lot of our clients and a lot of the people I'm sure tuning into this video will be sitting in Singapore, Dubai, low tax jurisdictions or no capital gains tax jurisdictions. So if I've bought some Bitcoin, again, just to use a simple example here, while I'm in Singapore, there is no capital gains tax on personal investments. What happens when I move back to Australia? What do I need to think about? Should I change anything? Should I review anything? What do the options actually look like?
Look, so a lot of it comes down to the standard, I guess, changing residency rules. Once it's a reacquisition at the time of your residency changes. So, depending on the market, and that's, I guess, when the market value substitution rules of the ATO allow for come through, because obviously there's no deemed sale, but you're now a new resident. So that's probably just from a reporting standpoint, is just, the date of your transition. Just get a listing of all your holdings and what the market value is. That's probably the best thing to do as a starting point, and then obviously discuss with whoever your advisors what specifically they want to see.
Okay, that certainly makes sense. So I guess before someone actually lands on Australian soil and their residency changes, important to speak with someone like yourself or their tax advisor to work out what those structures are.
And then I guess the documentation, because depending on the coins they're holding, can really determine what type of information and pricing you can get. Because the big ones, Ethereum, Bitcoins, it's quite easy to find market values at certain time points. But a couple of the altcoins, which is an altcoin is pretty much anything other than Bitcoin, but a couple of the other strange ones that people come up with, getting information is a bit tricky. So it's just making sure that, I guess it all comes back to, if you keep your information as organized as possible, your tax, your compliance, and just your general reporting can be so much easier.
Okay. Now, just, I guess, extending that a little bit further, and again, for point of clarification for our viewers, we've heard a lot about NFTs, these non-fungible tokens, or as they're commonly referred to as the JPEGs that everyone's downloading, the whole right-click save as mantra. Strictly referring to the tax side of that, is that taxed in the same way that cryptocurrency is?
Correct, it is. So it's essentially a taxable asset. So again, generally most NFTs are bought through the Ethereum chain, and so you might spend 5 Ethereum on it, and if you then sell it for 10 Ethereum, you've got to factor in obviously this price fluctuations within Ethereum itself, but also you've received 5 more as well. So it is quite simple though, because it is just a buy and sell. Once you've held it, you hold it, and that's it. So the actual, when you take a step back, it is really just a buy and sell. But yeah, it is a taxable asset.
That makes sense. So if you look at, I guess, experience you've had with other clients or people that have come and seen you, what are some of the common mistakes, the gotchas, the, oh my goodness, I wish I thought about this earlier moments that you found that people should watch out for?
Look, the biggest one is people not really knowing what a realized sale is. So a really common way of people investing in crypto is, instead of actually selling it and taking the physical currency out, they'll trade it into another coin. So they buy Ethereum, they might make whatever on that. Instead of actually taking it out, they'll actually automatically reinvest into a new coin. And a lot of the exchanges are actually set up where that's the default. So it will suggest another coin to go into. So unfortunately though, that's still a taxable event. So people can rack up these unrealized gains in swaps of hundreds of thousands of dollars that need to have tax paid on it, but they actually haven't received any of the cash. So it's about managing cash flow around, I guess, reinvested profits is the number one thing, because it's still quite an area where people don't realize that that's actually how it works. And so it's crucial to know that swaps is an effective sale.
Okay. So I guess sort of extending that or thinking about that for a moment, if somebody has a swap event where they swap a coin they've made a lot of money on into a new coin that drops in value, they could be in a world of pain when they owe tax.
Correct. And obviously, looking at financial years, people can make large gains in, one financial year, the tax rates are locked in, and then in the next financial year, they're like, geez, I need to, liquidate some of my assets to pay for the tax. But the market could have, tanked. And as most people know, crypto is a heavily volatile market where, 20% swings in a day is common. So, you do have to plan, because if all of a sudden you're like, geez, all this tax, I'm going to sell some stuff, you could be forced to sell at a loss, which obviously is not ideal.
Okay, excellent. Aaron, thank you so much. I think you've really given people a lot to think about. It's not just a matter of opening an account, transferring some money and hope it all works out, but you really need to give the tax or future potential tax implications some real consideration. If our viewers and clients, friends have any questions, how do they reach out to you?
Yeah, so look, the best one is email. That's probably my most active one. I do have other social media accounts that I'm active on at times, but yeah, in general, email is probably the best way to get in contact with me.
Excellent. Well, thank you so much. Really appreciate your time today, guys. Thank you also for tuning in. If you do have questions for Aaron, as mentioned, his contact details will be in the notes. Reach out. Please feel free to add any comments, questions you have. Please remember to subscribe. Thank you very much for your time, and I look forward to seeing you next time.